Yo, what's up, guys? I'm gonna break down this absolutely legendary trade I took on the Dow Jones on Monday. Not skipping over anything, going full depth into basically my whole bias and everything that went into this trade. So basically, as soon as I go into the daily, what I'm doing, right, I'm looking for market structure. Simply put, it's if we're making higher highs and higher lows, we're bullish. So looking at this, right, we have a few days of bearish price action going into Monday, and while it seems, looking on the short time frame, it might seem bearish, but in reality we still haven't broken this low, and these past two candles have respected this sort of like order block. Down here you see with this doji candle with a big wicks, small body, basically showing indecision, showing that we don't really want to push past this area. Now if we were truly bearish, we would have probably continued down here and ended up breaking this low, but as you can see, that hasn't happened. So on the daily, especially after this nice continuation candle bouncing off this low level here, I was fully bullish on the day. So zooming in on the 1 hour is where I mark out all my key levels. So basically, in a bullish market, I always mark out the highs, but in a bearish market, I would mark out the lows. Since we're bullish, I marked out all the closest hourly highs that looked like the most important. So this, and this, and might extend this over for my next point. And then after that, basically all I did was wait for price to break through one of these levels and look to take my trade. So zooming in, we go into New York, where we absolutely drove through, going through both these levels that we marked out. Not quite breaking through this, but we closed above this level and this level. So now I'm more focused on these levels, depending on what happens after. Looking on the higher time frame though, something interesting becomes a bit more apparent, is that we have a giant build-up of liquidity above these highs, right? Since retail traders, they'll look at this and think this is a resistance zone on the 1 hour, since, as you can kind of see, we basically respect this zone, right? Even on that 5-minute candle, we had a big wick. We didn't push through that top zone to start with, showing that for retail traders, they'll be going like, right, this is a good opportunity to sell. So when they're selling, most of them are putting their stops right above these highs. Now, stops, a lot of the time, price likes to gravitate to these stops, and especially since we're bullish, we're more likely to go for these stops than say stops down here from people who are long, because overall the market's moving up, so it's just easier to go for these ones, right? So that's basically like liquidity in a nutshell. But knowing this, right, we have more confidence to go long. As you know, there's a bunch of stops here, so we're really likely to go up there, right? So now we zoom in on our levels on the 1 hour, which is this level and this level. Now on this next 5-minute candle, I saw that we fully disrespected this level, so I just got rid of that, since we literally just like zoomed through it. So obviously it's not too important. But then this level actually got really nicely respected. As you can see, we were moving really fast beforehand, but when we touched the level, we started slowing down with these like small candles, right, with big wicks, showing indecision in the market, right? And now when I see indecision, all I want to see now is a break of structure to the upside. So what I do is I marked out the most recent high. Now, I wanted to get a good entry, so I'd play this pretty aggressively. I counted this as a high since we had a bullish candle and we had another bearish candle making a high and a lower low as well. Now, basically all I was waiting for now was a nice push to the upside to give me the confirmation that we're ready to long. And that's exactly what we got here. When we absolutely drilled through this high, closing above the body, which is what we want to see. Now, I don't enter on this candle, right? Just because I wasn't feeling it. I just wanted to retrace it just a little bit to get a nicer entry. So I think I entered around here. Put my stop a little bit below the wick just for a bit of breathing room. And put my TP to make it 2RR. Now, as you can see, this trade actually didn't end up playing out. However, I'm gonna be so real with you guys. My broker didn't think so. I'll pull up the screenshot right now, but as you can see on this broker, right, we don't come so far down, right? Come down here, not all the way to my entry, since I also go break even at 1-to-1. So as soon as we got to around here, I put my stop to break even to just cover my losses, just in case we reversed, which we did kind of come back down to my entry, but on this broker we didn't tap it. But my other broker on my prop firm, it actually did end up tapping me out at break even to basically the pit, which is quite unfortunate. But this still doesn't make it a bad trade. Honest, if you took this with maybe another prop firm, it probably would have hit, as you can see here, and it ended up riding pretty well, going up to 4R. And on the 1 hour, you can see that after this we continue to the upside a bunch more. We never ended up hitting our stop, say. Obviously it's quite unrealistic. We would have been break even, but yeah, we ended up riding a lot more. So in general, if this video helped you, if you guys enjoyed that, can you please smash that like and subscribe button, and stay tuned for my next videos.